So guys, we have officially jumped into July, which means that it's time for another dividend portfolio update. And if you saw my last video, then you'll know that we did officially hit the $100,000 mark, and it was about time. At any rate, in this video, I'm going to show you everything, like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in July. Now, before we get into all of that, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones? Anything cool that happened to you guys this last month? I want to hear all about it in the comments below. Anyway, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. Now, what we're looking at here is just my main taxable account over on Charles Schwab. And as we can see, it is valued at $82,208. And every single year, this account is bringing in $2,888 in dividends, which is actually a bit lower than where it was sitting this time last month. There is a reason for that. There's actually a couple of reasons for that, but I'll explain all that later on in the video. But going back to the account's current value for just a second, this $82,208 is about $3,000 more compared to this time last month. So June and so far July actually have been really good to me. If we look at the breakdown of the returns over here on Snowball Analytics, which is another one of my favorite portfolio trackers outside of my free spreadsheet, this is my go-to. And if you're looking for something with more bells and whistles than your standard spreadsheet, I highly recommend you check out Snowball Analytics. I think you'd really love this platform. And the cool thing is you can actually try it out for free. In the description, you can check out Snowball with a 14-day trial. And if you like it, you can save 10% on your subscription when you use code Ryne Williams. So definitely check that out. But looking at the returns, guys, in the month of June, there really wasn't too much action. The account was only up 0.65%. So really nothing too crazy there. It looks like we saw almost $400 in capital gains and also received about $210 in dividends just in this one account. We had a really big dividend payment come in from SCHD, which if you saw that video, you'll know that was a whopper, over $100 just from SCHD, but that was in the other account. That was in the Roth IRA. But then, like I said, guys, July so far has been really good to me. Just in the first few days of the month, it's July 3rd as I'm recording this, my account is up 2.5%. So we're up almost $2,000 just here in July, which is crazy. And if we scroll up just a little bit and compare my portfolio's returns to those of the S&P 500, to the NASDAQ, and to SCHD, we'll see that from the start of June until now, I am underperforming everything. The S&P is beating me out by 2.4%. The NASDAQ is beating me out by 3.2%. And actually, SCHD is also outperforming my portfolio to the tune of about 2.5%. Now with that, if we zoom out a little bit longer, looking at the year-to-date performance, it looks like the S&P is beating me by 2.2%, so pretty similar. The NASDAQ's beating me by about 4%, so still some underperformance on my part there. But we are outperforming SCHD year-to-date by about 3.2% here. And then zooming out once more over the last 365 days, here I'm taking the cake. I'm beating everyone. I'm beating the S&P by 4%, the NASDAQ by about the same, and SCHD by about 9%. So overall, guys, I really can't complain. And as I'm sure you can imagine, there were quite a handful of stocks in my portfolio that saw some pretty tremendous gains this last month. And that's what we're going to take a look at next. All right, guys, now getting into my best and worst performing stocks here, starting with my top dogs for the month. Clear Secure was the best performer in my portfolio. Over on Snapstock, we can see that it was up about 11%. And if we zoom out looking at the year-to-date performance, Clear is still looking pretty good. It's up 8.5% so far in 2025. And real quick, guys, I do want to mention that pretty soon we will be relaunching Snapstock. I don't have an exact date yet. It is still TBD, but we've been working behind the scenes, reconfiguring some of the things with this platform. And pretty soon we'll be rolling it back out as its own standalone platform. So prior to this, you could only sign up for Snapstock and use Snapstock if you became a member of my investment club. But pretty soon, like I said, when we roll it back out, you'll be able to just sign up for Snapstock and nothing else if that's what you want. And I think most people just wanted access to Snapstock, which is why we decided to separate it. Like I said, I don't have an exact date yet, but if you want to be first to know all of those details and if you want to stay in the loop, then make sure you're on the wait list. You can sign up for that. There's a link to it in the description of the video. At any rate, looking at my Clear Secure position, I have 128 shares at an average cost of $28.91, which is just below the current share price of $29 even. This is the first time in a long time where I'm actually not losing money on Clear Secure. That feels good. And looking at my returns, just talking about the share price, I'm only up 0.3%, so we're definitely not going to retire off that anytime soon, but I will take it. And including dividends on a total return basis, I'm up about 2.25% with Clear. But anyway, moving on to my second best performing stock for the month. This one is Starbucks, who's now back up to the mid 90s. Looks like in the last month, the share price was up 8.5%, which is pretty solid. And looking at the year-to-date performance, it's officially back in the green, up 3.25%. With that, my position is sitting pretty. I have 78 shares at an average cost of $86.34. So with the current share price about $8 above that, that's going to leave me up 9.4%, just looking at the share price, and about 15.6% on a total return basis, including dividends. But anyway, now moving on to my third best performing stock. This one was Williams-Sonoma, who saw a pretty nice gain too. They were up 7% in the last month. And looking at Williams-Sonoma's year to date, they are still in the red by quite a bit, actually. The stock is still down 9.4% here in 2025. Definitely still far off from the recent highs of about 216, 217 per share. We'll see if it gets back up above 200. I mean, it's quite a ways away from that. But you know, it's seen some nice momentum in the last month, so anything's possible. Nonetheless, though, my position's looking pretty good. I have 36 shares at an average cost of $66.54. So the current share price is now officially back over $100 above my cost basis, which is going to leave me up 160%, just talking about the share price, and 166% on a total return basis. At any rate, those three stocks did the best in my portfolio this last month. But now, on the other hand, in terms of poor performing stocks, the only one for me that saw any notable decline was actually Zoetis, the most recent addition to my portfolio. In the last month, Zoetis was down 6.6%, which is going to leave the stock still down 1.9% here in 2025, which is totally fine by me because, as we'll see in just a moment, I've been swooping up shares of Zoetis left and right, and I am so happy to be able to do so at lower prices, so I will take it. All right, guys, now getting into all of my buys and sells for the month. This was one of those rare months where I actually did sell out of a stock. It doesn't happen that often. This is my first sale in about a year since last July, but I did sell out of Altria Group in June. I sold all 56 shares at a pretty nice share price of $59.17, which, as we can see, is quite a bit above my average cost per share, or was quite a bit my average cost per share, I should say. So looking at my returns, I made out pretty well. I was up 40% looking at the share price, and about 72% including dividends. Now, as I'm sure you can imagine, that left me with quite a bit of cheddar that I had to reinvest back into the portfolio, and in doing so, I swooped up shares of 3 different stocks, the first of which was Chevron. With the proceeds from Altria, I added 12 shares of Chevron at an average cost of $144.71. Along with that, I also picked up 26 shares of EPD at an average cost of $32.10. And then the third stock I added to from the Altria proceeds was Blue Owl Capital Corporation. I loaded the boat, picked up 51 shares at $14.76. So I think I made out pretty well. And then in addition to those 3, I also dollar cost averaged every single week, sometimes multiple times per week, into Zoetis. Throughout the month, I picked up 6.77 shares at an average cost of $163.95. And then over in the Roth IRA, I continued to dollar cost average into both SCHD and VOO. With SCHD, I picked up 19.6 shares at an average cost of $26.50. And with VOO, really not much to speak of there. I only picked up about a quarter of a share at around $566. With all of those SCHD purchases, though, that puts me right around 420 shares of this ETF. So at this rate, we should be at 450 shares by the end of August. As you guys know, that's the goal that I'm shooting for, have been shooting for this year. By the end of 2025, I wanted to reach 450 shares of SCHD, but we're going to hit that no problem. Like I said, by end of summer, at the latest, we'll be there. Now moving on and taking a closer look at my Roth IRA. Right now it is valued at $19,110, which is a gain of about $1,400 compared to this time last month. So we made some great strides here in the Roth IRA, and every single year this account's bringing in about $520 in dividends. And with that, if we take my main taxable brokerage account, which is bringing in $2,888 of dividends, and add that to my Roth IRA, which is bringing in, $519 in dividends, that's going to bring my total combined portfolio value to $101,000. We've already surpassed the 100K mark. We're now at $101,317, and the annual dividend income is sitting at $3,407, which, if we compare this to last month's projected income, which was $3,450, that represents a $43 decline. Now, part of the reason for this decline was the sell of Altria Group, but that really didn't have that big of an impact. What really had the biggest impact was actually the spreadsheet, guys. Normally the annual dividend information gets automatically pulled from a website called FinViz, but every so often FinViz likes to go in and really mess things up. They like to switch around the format of their site and their columns and their rows, and that negatively impacts things on the spreadsheet, and did so to the point where the spreadsheet would no longer pull the annual dividend information. If you guys have been using the spreadsheet these last few days, you've probably noticed some errors, and that's what's causing the error. It is FinViz. So what I had to do is I basically went in and just manually inputted the annual dividend information, and I suggest you guys do the same, at least for the time being, if you're having issues with the spreadsheet. But anyway, I went in and manually added the annual dividend information, and in doing so, that basically just re-rated the projected annual income downward. So that's the main reason why we're seeing this, so-called loss of projected income month over month. Nonetheless, guys, looking at the year-to-date gain in income, we've still added $343 so far in 2025, so that's pretty good, and I think we're still on track to reach $3,600 by the end of the year. In fact, I know we're going to hit it. It's not even a question. It's definitely going to happen. But anyway, we're still on the right path, and that's what matters. Now guys, as far as my watch list goes, I did add one company, and that is PACCAR, PCAR, which looks like a really interesting company. As we can see, it's been a pretty solid grower over the years, and the dividend stats are absolutely phenomenal. I'm telling you more about that in this next video right over here, where I'm telling you why PACCAR is at the top of my list of dividend stocks to buy in July. With this one, I'm also telling you about 2 other killer dividend stocks that I think you need to keep your eye on, but click right over here to check those out, and I'll see you in the next one.